Guys, welcome to another week. I hope you guys had a very great weekend. So it's the beginning of a new weekend. Um, definitely we always come up with our video analysis for the week. So let's get straight into business, right? So this week, one of our pair of interests actually is the pounds USD, and we've been on this trade on this particular pair, for the last couple weeks, and we've been like making so much out of it. And last week we actually made some very good profit out of this pair. You can see this is a 191 pips trades that we closed on last week, and we're seeing even more opportunities in the markets, this week, which makes it very, very interesting. So without wasting more time, let's get straight into it. So getting straight into it, we have to go back to the bigger time frame to understand what has happened, because of course we had the weekly close, and every close in the market has a very key importance, right? So definitely let's get back to the monthly time frame. So on the monthly time frame, what can we see? Still the same level. Price is still on a very bullish level, and you can see so far so good. This month has been very bullish in the market. So not much information to see right here, but let's move to the weekly when we have most of the information we wanted to use, right? So on the weekly time frame, definitely, if you can remember from our last video, if you should watch the last video, is on YouTube everywhere, right? We talked about this level right here, previous area of resistance turning into like support, right? And ever since then, what has price done? If we look at things critically, price has made the push to the upside, made an exhaustion 2 weeks ago, and last week we could see the very strong face of push going to the upside. So this is telling us an information, right? And definitely price seemed to have completed the whole impulsive push, right? And is shooting for definitely a higher ground. That's what we're seeing right now on the weekly time frame. And what was the reason why the whole impulsive push started in the first place? Of course, these were reactions to traders taking their profit right at the 161.8, 161.8 Fibonacci extension of the last retracement, right? So now let's get straight into it. So now that we have this information, let's move to the daily time frame. On the daily time frame, we still have the same levels, right? The same levels are still acting, right? The reasons for a level, put it on the line chart to see things clearly, was the upper zone, mid range zone. You can see the area of sensitivity, sell sensitivity, sell sensitivity. You can see the medium buy sensitivity, sell buy sensitivity. You can see the sell sensitivity into buy sensitivity, and that's the reason why we got in the first place. But let's look at things more critically, and let's look at things more deeply, right? So what is the reason behind this, right? Let's look at things from the point of view of the chart structure, right? Structural wise, we have the push, right? After people took the profit, you can see the lower highs, you can see the lows right here. You can see price making the double exhaustion right on this level, right? After the double exhaustion right on this level, right, you can see the strong push to the upside, which we took advantage of this pair, this trade actually, to make about 300 plus pips on this, right? You can see the push to the downside, and last week was where we took the advantage of 191 pips right here. So this is telling us, what does this tells us? Like, structurally, right, we have the lower highs, and prices broken this level to come reject at the 61.8 Fibonacci to give us a new higher low. So we have a higher low in game right now. So what does this tells us? That further push is actually very probable. Look at the word probable, right? We anticipate it, right? We're not certain, because this is a game of probability, not certainty, right? So we have to definitely talk some probability, right? That's a very good psychology to have for every traders, right? So now that we have this in game, right? So that was the reason why for our blue, mid-range zone. So now that we have this in game, so what do? Definitely want to look at things more deeper, right? So let us find more reasons why we're looking, for price to push to the upside, right? So it's not only enough to look at things from the structural point of view. Definitely we're gonna look at things from other point of view as well, right? So we have a very strong level right here. What's the reason for our level, right? We're talking about the whole overall 61.8 level right here. So that's like the 61.8 rejection, which is a very strong area to note, because it's a potential strong resistance. So we actually noted that down, right? So let's look at things even much more closer, right? So let's take our eyes off the structure a little bit, and let's look at things on the chart pattern, right? So if you look at things more closely on this chart pattern, you're going to notice this is an inverted head and shoulder pattern, right? You can see the left shoulder, you can see the head, which is by the reasons of the double exhaustion, right? You can see the push, you can see the right shoulder right on this level, and we expect actually further push to the upside. So another reason why we anticipate, price making a push to the upside. So is that enough? No, that's not enough. We need to find confirmations upon confirmations for us to be able to understand things and bring more of this probability to our side, right? In the game of probability, you want to go with the side that has the more chances of winning, right? So that being said, now if we look at things clearly, that means for inverted head and shoulder and a chart pattern to synchronize together, right? We spoke about this in our course to all our students to understand, right? We talked about how much of a high probability trade it always is when the chart structure and chart pattern come in synchronism to each other, to give a high probability like entry or confirmation or a bias in the market, right? And this is a case, and this case is not, an exemption to that, right? So now that we have this, right, you can notice. So now inverted head and shoulder, how do we trade it? Wait for the break of the neckline. So what do we have right here? You can see the neckline right on this level, right? So let's take this off a bit and let's look at things. Let's zoom things out a bit and let's look at the neckline together, right? So we have the neckline right on this level. Look at the neckline. Right. So the neckline that we have on this level. Now, what is the first confirmation now that we've made sense with this information, right? That's going to help us to find an entry. Number one, a break of this neckline will indicate a confirmation. Number two, and our safest spot to get into this level into this trade would definitely and most likely be a break of this level for us to find a further push to this key level. So that's exactly what we're going to be acting on. So let's move to the 4 hour time frame to see things very well. So on the 4 hour time frame, what do we have right here? So we can see the strong rejection when price got to this level, right? So on the 4 hour time frame, the first thing that I want us to notice is the fact that this shoulder right here is it actually formed into like a flag pattern, right? So this is more confirmations again, right? Chart pattern confirmation. This is more confirmations for us again. So let's look at things. Let's look at things a bit. Yeah, so let's look at things a bit, right? So this is more confirmation. This is more confirmation. So we have a flag pattern. You can see the push. You can see the push, right? You can see the first exhaustion to this level, right? You can see another push, right? You can see another exhaustion, and what the price do right after. We got that break before the close of the market to hit our TP actually. So now what do we expect? We expect a further push, right? Because now that the flag is broken, we expect a further push to the upside, right? This is exactly what we're looking at. So apart from the fact that we have the chart chart pattern wise, apart from the fact that we have the inverted head and shoulder pattern, we have a 4 hours time frame flag pattern being broken. So these are more confirmation adding to our reasons for having a further push to the upside bias, right? So now what should be our confirmation? It's pretty much simple. So let's bring out let me bring out so let's identify the neckline out on the 4 hours time frame. So we have a neckline right on this level, right? So let's identify the neckline as a zone, right? So that we could be much more accurate at what we're looking at, so that we can consider it as a zone, not a point, right? So that we won't make any mistakes, right? So now this is what we're looking at as the neckline. So what is going to be our confirmation level? Number one, a break of this neckline. Number one, the price coming to react with the 61.8, which is the major resistance that we're looking at, right? We're expecting price to make some kind of reaction between this level, and the moment we see the break right above this level, right, definitely we consider this trade as deemed fit for a further push to the upside. So definitely this is what we're definitely going to be looking at on this space. So how many pips are we talking about after the push and exhaustion? Definitely we're looking at about 157 pips, or 100, depending on when you enter this trade, right? 157 pips for this particular trade, and definitely risking as little as about 50 pips, which is 1:3 risk reward ratio. So apart from the fact that you have a probable setup and you're waiting for a confirmation, definitely you want to assess the setup risk wise. Is it risk worthy, right? And this trade has passed our mark for being risk worthy. So what are we going to do like we already said, wait, sit out on the market, wait for the market to give you the confirmation, and definitely upon the confirmation, you enter the trade. Remember, this is not a guesswork. This is not a game of prediction. It's a game of probability, and putting odds to your side is what is going to make you a successful trader in this game. So rather than reacting based on what you feel, rather wait for the market to give you clearer information, and then you can react. So don't approach the market from the point of your emotions. Approach the a market from the point of logic, right? Let things happen before you execute, right? Just like fixes, right? To every reaction, there's an action, whatever it is, right? So you guys do have a very amazing week ahead. If you love this video and if you like what you see, if you like the value right here, subscribe to our YouTube channel at No Bad Trade Forex. Get us on Telegram at No Bad Trade, and get us on Instagram at No Bad Trades, right? NOBADTRADES. And you can like, you can comment, and you can share to your friends and family if you find this valuable enough. So thank you guys so much, and I wish you guys a very beautiful and amazing week ahead.